Morning, everyone. We'll be starting in about 5, 7 minutes. Just hang tight, talks amongst yourselves, and I'll be right back. Good morning, everyone. We'll be getting started in just a minute. Very blurry. Okay. It's weird.
Good morning, everyone. Hello, 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 and happy Monday. Jeffrey, Robert, how is everybody doing today? How is everybody doing? Got a lot of Roberts here. Look at that.
Done.
Yeah. Ooh, nice. Apple made $720. Nice, very nice. Very, very good. Carrie, Julian, hello, hello, hello. Hello, hello. Yes, down on Goldman Sachs. Yes, of course. Uh, yes. We are down on Goldman Sachs. Aside from that, how are you doing? Roger, thank you for Apple, look at that. 30% people are making money. Oh, AMD 610%, ESTC. Morning. My weekend was good and relaxing. It was actually very, very nice. I got an email, which is very interesting. I got an email from somebody. I'm not going to mention names, but it's a very interesting email. The email said, this was on Friday. And the email said, Roger, you asked if we're making money with you. Okay. I want you guys to listen to this email. Friday I issued a gap to green trade, this gap to green trade on Friday. You take your gap to green recommendation. By the way, I asked how the folks in the trading pit was doing. The answer I got was, you asked how we're doing, if I'm making money with you. It was actually for the pit, but that's fine. He's down 12.23%. He's down $69 on GPC from gap to green. And then he took a trade from SEDG in the members area, and he's down too on Friday. These are all trades I recommended at the end of last week, and he's down on all of them. Notice none of these trades were from the trading pit. None of these trades were recommended with an entry or an exit. And he's still pissed about the PSX lost. I don't even remember when I gave the PSX lost. Then I get the email again this morning, and he says, your recommendation to go long Goldman Sachs is a perfect example of why I'm frustrated. Let me ask you guys a question. What do you guys, I want to ask you guys a serious question. Do you think it's fair to judge a trade before it was closed out? Just out of curiosity. Okay. So basically he's pissed off. The GPC, which we opened on Friday, is down 12%. How dare I? And then Goldman Sachs is down. We just opened these trades up. Notice there's nothing about the 70 trades we made money on in the pit. Nothing about it. It's just Goldman Sachs. Goldman Sachs. Here's the thing. I am going to have losing trades. I'm a human being. Number one. Number two, how about you wait till I close the trade to comment on it? So basically, I told this gentleman, and I hope he's here, that it's not a good fit for this program. He's looking for magic. Good morning, Thomas. It doesn't work this way. So if you're here and you know who you are, if you're here, this is not how the program works. You actually need to listen to what I say. It also helps to take the trades that I say, and it also helps to open and close them when I tell you to open and close them. And it also helps you not to second guess me. How about you let me close the trade first? And if I did lose money on Goldman Sachs, it would be the fifth trade I would lose out of like 75 trades in the members area. So I just want to make sure you have realistic expectations. There you go, Julian. Let's see here. He can't get in line with Anthony. Raymond, thanks for replying to my email so quick. 100% in the last 2 months. 100% in the last 2 months. Brett says, have patience on trades. Don't know how many of my losers from the old days would have been winners had I given them more time. Anastasia said, appreciate what I'm learning here. I'm double check everything and recommend. I keep telling that to him, but he doesn't listen. Look at your PN. Don't look at your PNL. Look at the chart. Of course, but it's just so funny. But here's the best part. Here's the best part. So last week, I asked him, I said, did you take the trade? Uh, which trade did you take? He's selecting which trades he's taking. He's not taking all of my trades from the pit, and then he's complaining about the trades that he gets that don't go his way instantly. Instantly. Mind you, Goldman is down $5 on a $385 stock. That's like a $40 stock being down 50 cents. My email is right here. So my point is for this gentleman is you will not make money if you don't change how you think about markets. You will not make money with me or anybody else. I know Bob, but he doesn't listen to what I say. So I'm hoping he will listen to what you guys are saying. I'm hoping that by me, yes, about a 93% win rate, Scott. Yes, but it's not. But Goldman, but Goldman is down. How dare I? It's funny, man. It's funny listening to this. So, guys, if you're going to send me emails, send me constructive emails. Don't send me an email that's down. I'm down 12% on a stock that I opened up 15 minutes ago and complain about it. Come on. Yes, he needs to listen to Kramer. Do you expect it to swing trade it if you do not day trade? If I'm not day trading it, it's a swing trade. Yes. Nice, Gary. Yeah, very, very nice. Very, very nice. Yeah, I'm really trying to help you guys learn to become good traders. He does sound like you need a broker. He needs a broker, but it's like you can't. It doesn't work the way you want it to work. It doesn't work on your time clock. It doesn't work on your schedule. You take what I give, and you don't complain. You know. Thank you. Brett says you turned around my trading career, so feel awesome. Thank you. Yes, Kerry, you have to take all trades to rear. You can't. He didn't take Meta last week, but he took Apple. But you know why he didn't take Meta? Because he always loses money when he takes Meta. That was his reason. He loses money when he takes Meta. So, but guess what? We made money on Meta last week, buddy. Thank you, Jeffrey. Yeah, but he won't listen to me, Gary. Gary, I've tried all of that. He wants it his way, on his schedule, on his time clock, on the trades that he wants to make money on, you see? It's very specific. Yeah, it sounds stupid. Good, good. Oh, you made 1100 on an ADM. Good, 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 Sylvia. Good. I'm sure Matt is copying all of that. But obviously, I don't know what I'm doing and what I'm talking about. It's just amazing, you know? Thank you, Raymond. Speaking of muscle, I had Matt put the seat thing back on my chair because I'm not having the pain that I had, which is great. Robert, how many days time should you be doing on the option on these trades? If you don't get anything within a few days, we're usually out. Da, 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 da. No, the email is not in the chat. I'm not going to post the email in the chat. I pretty much gave you all the goodies, but it's like it's amazing. We literally put Goldman in like what, an hour, 2 hours ago, and it's amazing. David says $10,980 on ADM. Very nice. Yeah, we're going to move on right now, Gene, because I got plenty of things to talk about. Thank you. So let's talk about market action. Let's talk about market action. And I mean, losing money sucks, but it's like follow the rules and listen to what we do. At least you'll have a chance. Okay, let me show my chart. Okay, so looking at the SPY, which we will look at right now, you could see that we're coming off of this level. Now, you still have a lot of liquidity in the market. And even if the market starts cooling off here, you're still going to have some stocks coming up. Typically, when you have a period like this, the market likes to cool off for a day or two, and then it picks up momentum again. This is why I was so hesitant to put on trades this morning. If anybody in my room, you guys know, oh, I got to share my screen. Shoot, Matt, where are you? You got to tell me to share my
I'm
screen.
trying to copy and paste stuff.
Good answer. At least you have a good answer. 6. Okay. Thank you for that. Thank you, thank you, thank you. Thank you, thank you. Yeah, like I'm really trying hard to help make you guys money, and I've been pretty successful at it. But that Goldman Sachs, and Meta, oh yeah, not enough money for him on Meta. All right, I told him that I don't think this program is for him, but I'm just gonna leave it at that. Okay, so I don't love this. I don't love this. Very low directional bias right here. Very little trading action. Gary, how are you? RV, how are you? We haven't filled the gap here. I want to show you something, guys. QQQ. QQQ. Here's the high from or the closing from yesterday. Notice we clipped. We filled the gap completely. Now the SPY. Notice the SPY. Here's the close. We haven't filled the gap. Watch this. Look at the Dow. Dow is the strongest one so far, which is telling us that blue chips are leading industrial, financial, real estate. There's just not that much technology that I'm liking right now. And you can also see that I would feel more comfortable being in stocks that are a little more stable right now, like Goldman Sachs, for example, and leaders in financial. Citibank came on my screen. You guys have the scanner. You guys know what stock, Discovery financial stocks. Financial stocks are looking really, really good. And as we all know, Goldman is a big financial stock. So I promised you last week that I was going to do an earnings update. I wanted to wait for some earnings stocks. Look at you, Adam, making out like Bandit. Let me repost that.
I got it.
Yeah, good. Okay. All right. So let me talk to you guys a little bit about earnings. This is where you may want to take a piece of paper and a pen and start writing things down a little bit. So again, I'm still bullish on the market. I think we're going to have a little chop. I think after 3 days like this, it's absolutely normal, healthy for a market to have chops. And I think for Goldman, that broke out to what I believe today is the highest price it has traded in since a year ago. A year ago. Okay. So I'm sorry if you don't like my picks. I apologize. That one person, the only person said it. But I like Goldman. I like Goldman a lot actually right now. But you gotta give these stocks a little time. I mean, maybe we're wrong, maybe you're right, but you gotta give them. Yeah, Jeffrey, it is. But we got in right here, like right at this price. I'm waiting for it to continue moving higher. I like this breakout, and that's what I'm seeing right now. Yes, Iris, I agree with you, but I think while liquidity's here, we're still going to see a little upside. Also, if you look at the S&P, this is the S&P 500 today. Look at how small these bars are. Look at how small these lines are. Remember what I say? Are we looking at a Cadillac or a Honda Civic? This is a Honda Civic from 1982 when they were like they defined the subcompact. So you could see here very little commitment. What we're seeing right now is a lot of retail traders manipulating their positions, closing in, getting out, moving things around. But I'm not seeing a directional market. So it would be foolish for me, A, to get into a lot of stocks when the market's doing this, because this is very random. B, gauge stocks that we're in right now on a market like this, because this is just randomness. You're welcome, Tom. You're welcome, Perry. So again, just want you guys to understand this is I want to see bars like this. Let me show you. I haven't seen much lately. I want to see bars. I want to see bars like this. I want to see bars like this. And after a bar like this, which is what you're seeing now, is not that uncommon. Okay. It's not that uncommon. So take it easy, take a stress pill. We'll let the market decide where it wants to go. We're not going to trade aggressively right now. But at the same time, we're not going to let a stock that's breaking out to a 1 year high uh, uh, get us out because it's down. If I don't even know what it's down. It's down. Let's see, 192. It's down point. It's down 0.10%. 0.10%. 0.10%. Ah, yeah, Thursday report is holding a lot of folks back. But remember, we got FOMC, we got tech earnings. I'm going to talk about earnings in a minute, and things are looking better. So, as much as I would prefer, I would love, let me tell you what I would love. I would love for the market to do this right now. I would love for the market to come to the 50-day moving average right now, consolidate, break down, and start coming back up. Because A, it would give us a choice. It would give us tons and tons of opportunities to the long side. It would give us an opportunity to see which stocks are strong and which stocks are actually weak. Whereas right now, most stocks are really, really strong. So it's very, very hard to pick trades that are standing on their own 2 feet. Also, it's very, very, very hard to trade because of earnings. We got big earnings this week, and we have a lot of stocks that are impacted by earnings. So you guys have to understand, we got to look at the big picture. We got to look at the whole 9 yards. We got to look at everything. If we don't do that, we're going to be in a very, 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 very bad position. Um, ironically, this is ironically, I like two stocks this morning. I like Goldman Sachs and Ally. Goldman Sachs decided to cool off a little bit, and Ally decided to firm up. You just don't always know. It's just how it is. Yeah, I gotta wait till the right time. Of course, of course. Nice. I like that, Tom. $10 plus on my recommendations. See, even if you traded with one share, Tom, you still would have made money. Anyway, let's continue. So let me talk about earnings scorecard. It's we've got enough to talk about now. I told you I wait till we have at least 50, and we finally have 50. You're welcome, Chaz. So in terms of the fourth quarter scorecard, we now have results for 52 S&P members, or 10% of the total membership. Total earnings for these 52 index members are up 1.4% from the same period a year ago on 4.8% higher revenue. 80% have beaten EPS. 80%. That's very good. It's very, very good. And 63 have beaten revenue, which is not bad. It's not bad. Now, here's where it gets good. For the financial sector, we now have fourth quarter results for about 45%. They say 40, but I'm going to tell you it's about 45 now. 45% of the sector's capitalization. Total earnings for these finance companies are down 2.4% from the same period last year on 1.1% higher revenue, with 75% beating EPS estimates and 62.5% beating revenue estimates. That's good. That's good. That's not bad. That's good. Jeff says, do we have enough tech stocks for what, Jeff? Can you be a little more specific so I can answer your question? Looks like you had a good question. I just don't understand what you're saying. Okay, so let's continue this. Excluding financial, which is putting a drag on this so far, earnings for the rest of the S&P companies would be up 9% with 9% higher revenue. So the fourth quarter earnings this is the part you want to write down, are expected to be up 0.3%, only 0.3%. That's the expectation on 2.2% higher revenue. This follows a 3.8% earnings growth. So my point here is they're only expecting earnings to be up. Let me tell you what's baked into this market. No, we don't yet, but I'll talk about tech, but we don't have it yet, but I'll get into it in a minute, Jeff. You're moving in the right direction. So the point I'm making is earnings typically outperform estimates. They typically outperform. They don't underperform. They typically outperform. So what I'm thinking is the expectations are 0.3%, folks. 0.3%. So I'm thinking if we get a little bit of a surprise this quarter, things can really move up. Now, am I really bullish? No, I'm actually kind of bearish, if you want to know the truth. I'm a little more bear. Now, what I am makes absolutely no difference, and it shouldn't make any difference to you, because no matter how bullish or bearish I am, my butt is going to trade what's in front of me. You guys know that. I'm not gonna mess around and pretend to know what's going to happen in the future. I'm not that smart. But my point is, we were expecting the last two quarters for the numbers to be lower than they are. So if the number is going to get higher than, let's say, 2%, 2.5% EPS gain, that can give us a little bit of a leg up. And by the way, the number you want to write down for the SPY S&P 500 is 484.24. If we go above that level, we'll cross above the VWAP once again. Just the number I want you guys to have in the back of your mind, okay? Cyrus, it doesn't impress me at all, but I'm going by estimates and what's baked into the market. You know the routine. You've been following me long enough. Gary says above normal EPS percentage likely to happen. Some of this is already, well, that's exactly. Well, they're saying if EPS wasn't that on financials wasn't this low, we would already be up 9%. They're expecting 0.3%. Thank you, Brett. We have a lot of very smart people in here, and actually people who know how I trade and who are used to my propensities, my scheming. We did see a significant negative estimate revision that started in April. Gary, this goes more with what you were talking about. We did see a significant negative revision starting in April of last year. Obviously last year, during that period, estimates in the aggregate declined by about 15% from peak to trough, with the magnitude of negative revisions from several sectors exceeding 20%. These include construction, consumer discretionary, technology, and retail. Now, the revisions trend stabilized in 2023. Remember, 2022, 2023, they were going down, then they stabilized, with earnings estimates for a number of major sectors, including the tech sector. Who was it that asked me about the tech sector? Jeff, including the tech sector, they started coming up again, okay? With many tech sector companies starting to report fourth quarter this week, we would expect more movement here in the days ahead. I'm just going back. The favorable revisions trend continued until October 2023, where estimates starting easing all over again. So I think now they're going to start picking back up again because the estimates are so darn low. Other sectors whose 2024 earnings estimates also appear to have inched up include retail, autos, aerospace, and utilities. Do you guys want me to send you this, to give you this report? Will it help you if I give it to you? Give this. Here we go. There you go. Now, just so you know, I don't write these reports. If you want to know who writes these reports, I'll tell you who writes these reports. The name of the company is FactSet, factset.com. A company by the name of Zacks, Zacks, likes to put some of them out. So I don't subscribe to FactSet because I'm not that big on earnings. They do really in-depth analysis. I only care about the revisions going up or down. But if you folks want to keep track of this, feel free to go to this site right here. They don't make it easy to find it, though. And if you go to Zacks, let me show you where you could find it on Zacks. Yeah, I mean, it's the only thing I get on Zacks. So here's Zacks. It's kind of weird. I'm advertising somebody else's company, but I mean, it's the only thing I do here. It's all the way in the bottom in the homepage right here. This dude right here, Shiraz Mayan. And I thought he was writing all this. And then I found out he was just getting it from FactSet because I was like, wow, he's good. FactSet. FactSet is where it all comes from. And they mention it as well. Again, my job is not to pretend I know everything. My job is to show you where you can find everything, right? That's the key here. So again, feel free to investigate. Zax doesn't update very often and they're very late. FactSet does, but I get FactSet loves to hide it. So not easy to find any of those things. Another thing that I've noticed that looks very interesting, let me pull up my chart, is where's my chart? Here. Here's the other thing that I'm noticing today. You might or may not have noticed this. Oops. Why did I just close this? There, here we go. Just opened it again. If you look at TLT, look at TLT right now. Okay? Look at this intraday trading action on TLT. And look at the trading action on the SPY. I read Seeking Alpha daily, RY. I like Seeking Alpha. Seeking Alpha is great. I use them all the time. They're great. Red and green lines on my S&P chart. Oh, this I don't draw these. These are Matt gives me levels. These are levels. I'm comparing levels drawn by two different indicators, and we're comparing the one on the left with the one on the right to see which levels hold better. Once we find which levels hold better, I'll let you know. But no, I don't do it manually. Matt does it for me every morning. Once he gets up into the office. So again, if you look at TLT, it's largely following the bond market, and the stock market and the bond market are very correlated intraday right now. And if you look at on a daily basis, we gapped up on the S&P on the bond market, but ever since we gapped up, we've been going down and now we're filling in this gap. Very, very similar to what you're seeing on the Dow. I mean, look at this, guys. This is the Dow Jones. Look at right here, the left side. Look at it right here. Right here. Look at the Dow and look at the bond market. Do you guys see the correlation? Thank you, RY. Almost identical, right? So this is one of the reasons, why I'm in financials right now. Because if interest rates go down, it's not going to impact Goldman Sachs very much as much as it's going to impact tech stock. So financials, 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 financials. Now let's talk about stocks that I like, stocks that I don't like. Folks, please listen to me carefully. I know I sound very smart sometimes, but I'm going to be very honest with you. We don't know what the market is going to do next. We can extrapolate, we can guess. I know we've been right on the S&P almost down to a tick. I know that. It comes with 30 years of experience. But I'm explaining to you, we really don't know whether the S&P 500 is going to continue moving higher or not. Based on everything I know, we should see some we shouldn't just come right back down here. We should see some consolidation here. There was too much of a consolidation here. And this consolidation gives us power to go higher. So I do think, and we have a lot of reports this week, which is another reason why, you know, don't look at a stock till I invalidate it. This is not looking that bad at all. And if we start coming up towards the end of the day, we're going to start getting buyers more interested in these levels. Okay. Also, as I showed you earlier today, there's not much commitment. There's not much. You would think if this market was ready to really go down, it would have gone down. It gapped up and it's like it went down a little bit. Now it's coming back up. This is just market. This is just the market trying to figure out its fair value. That's all this is. don't think this is like a non-random move. It's not. Thank you, RY. I appreciate it. So again, the point is, let's not micro analyze everything because the market is bullish right now. And the reason why I did not make this trade official today, even though it went your way, or this trade official today, is because the market is so strong. I don't want to go short. I want to go against the grain. So I want you guys to understand the dynamics of everything, okay? And understand why I'm doing what I'm doing, why I'm not doing what I'm doing. Above and beyond that, before I start giving you stocks that I like, exactly, Jeff. That's why I'm still bullish. If you look at the economic calendar this week, which we have right here, and I talked about this in my morning video, you will see we don't have a lot of reports. So I think we're going to see somewhat of a muted market till we get GDP, durable goods. And I think we're probably just going to consolidate near the high end. That's okay. I can handle that. I'm okay with that as long as we don't start breaking down. Um, but don't be surprised if the majority of the news came in later versus earlier, okay, in the week. Because I don't, if I was a, excuse me, if I was managing money, if I was managing institutional money, I would not want to go long right here before this happens. I would not. I would not. I would wait. GDP is a big, 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 big day. And also, I think you guys, something here, real quick. Real quick. Let's see if I can find it. Oh, look at this. Matt, do you see this?
I did.
You guys see that? Are you shocked?
You
Are you
sent that
shocked
to me
by
this
this?
morning. No, not at all.
Is anybody shocked by seeing this? Remember
Actually,
68%? I called them on it. I said they're absolutely crazy. That's
I
bullshit. It's not going to happen.
I actually sent it in a text to someone that I met from a different he's a guy at a different brokerage account. We had a pretty heated argument about this about a month ago. He was like, "No,
What if I tell you that this is going to go down to about 25%? And here's the thing. How long did it take? Did it take 3 days or did it take like 3 weeks? It took like 3 weeks, right? So how efficient is the market really? If we're able to call this almost a month in advance, and this is total fundamental nonsense, it's not that efficient, is it? There's a lot of inefficiencies in the market. He's happily married, Bob. All right, so just wanted to show you this. Don't be surprised if this goes into the 30th percentile, 20th percentile. No rate cuts for a while. No rate cuts. But the market is holding up pretty good with that. So, okay, let's now talk about stocks. No, it's not happening in March. Of course not. Ridiculous. All right, stocks that Uncle Roger likes. Gapped up almost at took out the all-time high. No, not all-time high, the swing high. Look at this. This is a nice trend here. That's a nice trend. Probably would wait for a little more upside. Maybe, maybe not, but I like this. Now, I would prefer you guys wait till it hits the high again to get in, but I do like this stock. Show you the option chain here. Hold this back. Exactly, John. It ain't happening till later this year. So I think the bond market's going to go down. I think the bond market, it's going to put pressure on bonds and it's going to put pressure on stocks. But so far, if it happens really slowly, the stock market is showing that it's not. Bond market down for sure. Down for sure. Remember, it doesn't have to happen at the same time. That's the thing. You could see bonds go down, stocks hold up because of different sectors, and then you could see it. So it doesn't have to happen at the same time, but it's not bullish for stocks. Look, here's my let's all make sure that we're all on the same page. This is the SPY. Do I like the SPY here? Yes. Do I think the SPY is just going to run away and go higher and grow wings and fairies and rainbow? No, hell no. I think the best case scenario is we sucker in a few more buyers, get a little more liquidity going, and then come right back into this range and break down. That's what I think is going to happen. I haven't got to the stop loss yet. So the stop loss in this case would be right here, right there, about 81.46. And we would be buying the 83 calls. No, banks will not buy bonds at these levels. Banks know that bonds are probably if I know that interest rates are going to go higher, bonds are going to go lower, they're not going to be buying bonds. You're going to see some downside in bonds. Wait till that level goes from 42 to 25. You'll see what happens. Have you seen bonds go higher since it happened? No. 83. We would be looking at 83. Matter of fact, let's do this. Let's go this. 18 days out, 82 right here. 18 days out, 82. And then some, Laurel, and then some. Another stock that I like. I haven't talked about this stock yet. It's a new stock on our list. Monday. Looks just like net. Looks just like net. Are these stocks as good as stocks that are up here making all-time highs? Yeah, they are, because a lot of these stocks are going to go through a sector rotation, so they look really juicy right now. Don't see any issues there. So that's okay there. That's fine over there. My stop loss for this stock would be right here under this base, about 185. Yeah, it's a volatile stock. You could put it right here, but honestly, I would put it right here. 185, 60, 186. That's a fair area for that stock. A fair area for that stock. Harry, it was an 82 strike price. 18 days till expiration. And in this case, we don't have much liquidity here. Don't have much liquidity here. Yeah, I would probably just do the underlying or just do NET. Next one, Logitech. Look at Logitech. Logitech is breaking out. Doesn't have a lot of liquidity from what I could see here. Let's see what this. Now the spreads are tight. Our stop loss on would be right here, right around 90.56. Okay. Actually, I would even go a little higher, maybe 91, 92. Sorry, a little bit higher, right here. Right below this pivot right here. Maybe like right there, 92. Let's just say 92. We would go 25 days out and we would go to the 90 strike price. It's actually not that expensive and it's actually pretty liquid. And this stock doesn't have a lot of market cap, so it can move. Good for you, Jeff. Good for you. Next one, SF. I think this is a financial stock. It's looking really good. I like the foundation. I like how it's breaking out. Financial stocks are looking good. Matter of fact, look at financials today. Look at financials versus most sectors. They're holding up pretty good. I like financials. So SF, we would put our stop loss right here, 67.77. And the spreads are just awful here. Right here is probably the best thing you're going to get. Not loving this one. Yeah, I'm not screening for earnings, folks. I am not screening for earnings. Why? Because I know a lot of you rascals like to take earnings trades, and I know some of you don't like to take earnings trades. I personally would never, ever take an earnings trade unless it was by accident, because to me, it's speculating. A lot of you guys like to take earnings trades. If you do, God bless. Next one. Ally Bank. And look at this intraday trend. See, I should have picked this one instead of Goldman. But anyhow, here we are. It's moving higher. I would put my stop loss at the 8-day right here, about 34 level. You want to be more than halfway below this level, about 33-ish around here, right around there. I like the stock. I like the stock a lot, actually. It's just I can't have more than one financial. That would be very irresponsible of me. And we would go about 18 days out. We would go to the 35 strike price right here. Right there, 18 days out. Next one, CrowdStrike. Yes, we do like some techs. Look at how good this one is holding up all day today. The market's doing this. Look, this crowd is doing this. I'll take a look at it in a bit, RY. Let me see how I like this. So I like this. I like the stock a lot, actually. It looks really good right here. Looks really, really good here. I like it. We would put a stop loss around the 284 level. We would go to 292 right here. 292.50 right there. There you go. See, Cyrus and I agree on things. We like CrowdStrike. Mhm. NVIDIA. Look at NVIDIA, guys. Matt, I could have stayed in that weekly cash flow trade and got out with zero instead of 1 penny
Yeah.
and got a whole 14 cents instead of 13 cents. Wink, wink on Friday. You guys closed it with me. We took 14 cents in. We closed it. I didn't want to hold it into the weekend for 1 penny. I do like NVIDIA, although I think it's a little overdone, but the momentum on the stock is just amazing. I'm not happy about the intraday trading action, so I would just wait off on this one. GE. Doesn't GE have earnings today or tomorrow, or it already had earnings? Do you remember, Matt?
One second, I'll tell you. Tomorrow.
Tomorrow. Okay, so the stock has earnings tomorrow. So you got to be very, very, thank you, Adam. You got to be careful with this one. Stop loss right here, 126. 11 days out. We'd go to 128 right here. Nice spreads, 11 days out. Um, CDNS. Nice breakout to the upside. Also tech stock, but I like this one. Again, a little too much too fast. I kind of would like it right here. I would wait for it to pull back a little bit. It's a little overdone right now. So I would rather wait on this stock, okay? Um, Caesar. Caesar. I like Caesars right now, but I would wait. Now here's a perfect example of a stock that I would wait till the end of the day. If Caesar rallies towards the end of the day, it means we really, really like it. If it doesn't rally towards the end of the day, it's a dog. So we want to wait for it to rally towards the end of the day. And if it does, we would put a stop loss about right here. 44.53. We'd go 11 days out, and our option would be the 46 in 11 days. Next one, ZS, one of my favorite stocks today. Look at how good this looks. This stock looks fantastic today. And look at the chart. And this doesn't have a strong breakout. It just started breaking out right now. So I would put my stop loss right here, right around 224. And I would use the 232.50 right here, 232.50. This is where I would give us that's another level to look at. Yeah, sure I can. Yeah, I could tell you that. It's the February 2nd expiration. Yeah, I could do that. No problem. No problem, Mark. So again, stop loss. I told you where the stop loss is. I told you where the profit. I like the stock. I like the stock a lot, actually. I would probably consider day trading the stock, depending on what the market was doing or lack thereof. I mean, look at this. Talk about death. I mean, this is like overnight session right here. Just like nothing. I mean, nothing. Doesn't want to give us anything. Nothing. Definitely not a fast market. Not a high probability trading environment, which is okay for holding, but not good for trading. Now, um, stocks to the short side, ADM. Yes, I know several of you have taken this trade, and I know several of you have made money. This trade looks like it. I mean, the stock looks like crap. It looks like it's going to go down more. But Roger, it already went down all this, and look at this gap. You know what my answer to you is going to be? Boom, 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 and probably one more time, boom, after this. Matter of fact, you know what? I'm gonna call a short on this because I like how I like the stock to the short side right now on a pullback. Matt, look at this right now. Look at that. Nice downtrend, nice pullback to the moving average.
Yep.
Probably ready to go down again. And look, this is getting red again. I'm gonna tell you, I'm gonna put a stop loss right here, 223.18. I really like this stock right now. I think it's gonna go down to about 199. And the second February 2nd expiration option. In this case, it would be a put, not a call, obviously. And we would be talking about the 220s, the 220s.
It's a very news driven event, just so you're aware.
Yes. So waiting for more for the next shoe to drop. But I like the pullback to the upside. Good strategic area to take a trade, filling in the gap nicely to go down. My suggestion would be wait for it to take out this low right here before going down. 209. I know you're going to get less, but it's worth it. Trust me. It's a good confirmation. It doesn't have any good news today as well. No, it doesn't. It doesn't. Yeah, it's ADM. It's not AMD. What happened to AMD trade? Paul, for what service? What are we talking about, Paul? ADM. Yeah, yeah, I'm going there. So, my stop loss would be right here about 59.60 level. We would obviously be looking for puts. February 2nd is fine. We would be looking at the right here, the 59s, right there. Yeah. Okay. Next one, BG. BG, another one that I want to sell. This is a good short. Like the stock, I would put a stop loss right here at 94.54. I would go 25 days till February 16th, expiration February 16th. We would be looking at puts, and I would be buying the 95 strike price put. That's what I would be doing, 95 strike price put. Here we go. A new one to the short side. Quest. Quest. Stock is breaking down, broke down below its key support level. Support is now resistance. It's breaking down. There's nothing here all the way till about 121. It's got a good downside move, good potential here. Stop loss right around the 135, 88-ish level. And we would go till February 16th, 25 days out, February 16th. And we would go to 135. It's not that they're not the spreads are a little troublesome, but I'm sure you can work this order and get it done. And that is what I have for you guys today. Now, Matt, seasonality, my friend, tell us what we can expect. This is important.
All right.
Don't go anywhere, folks. This is important. Seasonality is a big thing this week.
Okay. So here is the long side for the sectors. This is the long system. Industrials is, you know, to the upside, decent numbers, not awesome. Utilities coming in just at acceptable levels, I would say. Real estate popping back up again, still the strongest. If you missed it on Friday, here is a visual representation of what we're looking at this week. So you see kind of a lot of chop. Financials are strong. Consumer discretionary is strong. Tech is strong. Real estate looks like it kind of dives off after tomorrow. So, but that has had an extended period of pretty strong seasonality. Everything else is choppy to downside. This right here, if you don't know, this is the Dow SPY and QQQ kind of layered on top of each other. And they are mostly positive this week. seemed to be catching a bid towards the end of the week as well. So we'll go back to the long system now. Real estate's okay. Actually, real estate looks good. Utilities look good. Industrials kind of makes sense. They move together. Just while we're on the subject for real estate, home builders ETF also strong. That has more trades, so we can put a little more meaning into that. On the short side, we are kind of all over the place, but we definitely seem to be leaning to the short side. Healthcare, uh, good downside seasonality. Tech, not so much. The profit factor is not there. So expect more choppy market. Same thing with financials. Really wouldn't take that short. Uh, I wouldn't even validate it as the seasonality being behind it because the profit factor is not there. So what it's getting is chop. It's not actually getting a move. And if we scroll over to the 10-day hold right here, I see a lot of green, but not strong green. So we're still kind of hanging out. Energy, believe it or not, is decent. Basic materials, uh, we saw that on the long side, and we're seeing it again. And industrials, accuracy is acceptable for a 10-day hold, but the profit factor is pretty weak. 1.23, we like to see it 1.5 or greater. So it's not under one, so it didn't lose money, but it's not really knocking it out of the park. And for seasonality to be a justifiable part of your trade plan, uh, it needs to be really strong. Oh, thanks, Michael. Made $867 on Matt's recommendation to Costco. Cool.
You better put that in the. Actually, I'll put it in the chat, Matt.
Cool. All right, here's the long side right here. We'll grab the number real quick. I suspect it'll be uneventful. And it is 176. That is pretty standard for the market. Doesn't really tell us much. Look in the long side here. That's pretty cool. 101. That makes sense though. Fortinet's been kind of a growth stock. It was really on a tear. Probably about 6 to 12 months ago. It was just screaming to the upside. Let me look at the chart. Make sure I'm not speaking anything that's false. No, I'm not. Right there. Had a nice run. And then before that, I was on a really nice run again. So that was about, yeah, this is what I was really talking about. It's doing good again, but we made a lot of trades in this run. We made a lot of money with Fortinet. So the profit factor makes sense because that is it's like a 60% move in about 4 or 5 months. So that would explain the 101. Let's look at things. We've got AMT. I've been seeing that quite a few times actually, but it's always been uninteresting because of the price action. And there it is right there. Looked nice over here. And now it's just a bloodbath. It's just been, I mean, this is an extended downside move since the new year, actually. So maybe there's some institutional selling. Maybe they're kind of moving it off the books because that is some pretty good sustained downside pressure. If you were to overlay the SPY on it, it would not correlate very well. Okay, you've got ROP. That one looks interesting. 21 trades, 4.5 profit factor, and that chart looks awesome. It's pricey, so if you're an options trader, might be a bit of an issue. Yeah, you could do a spread, but even then, you're going to be pretty expensive. But the trend looks good. I hate the timing of this breakout because it's always nice when the when you're approaching the highs on the daily that the SPY is having a good day. And I don't know if there's any kind of objective reasoning of why stocks reach. I don't think they're really connected. I just think it's hard to tell if it's really rejecting this high or if it's just being brought down with the broad market because the SPY has been just stuck. So actually looked the futures look worse than the underlying or the ETF, excuse me. See a few more. You see pretty broad mix here, and that's not great because there's not a lot of stocks here. There's only 100 and I think we said 171.
Mm-hmm.
So typically we'd want to see a little bit more of a trend on the sectors. So you can see the confirmation in the broad market, which is we have like 350 out of 500 stocks with above 70% win rate, or we can see really specifically like, hey, almost, the ETF of real estate was strong, and I see like 8, 9, 10 real estate companies right at the top, which we kind of saw the last week and a half ago, maybe a week ago. But now I just don't see very much in it. Well, let's go to the short side. Yeah, the number is even worse. 121 to the short side. So favoring the long side, in my opinion, though, not really favoring either side. Just because one has more than the other, if I got a 40 on a test and you got a 55, well, guess what? We still both failed. I don't really want, I mean, I'd take your grade, but none of us are passing.
Right.
I see ZBRA a lot on here, but it's it's in a stronger sector. Now, industrials was one of the only ones that looked decent. So, and all these profit factors are very low as well. Let's look at Chevron though, because that is looks like he has a big tail on that candle. Definitely rejected the low, but if it starts to turn around and tries to test it, might be a decent short. I would actually this area right here would be pretty key. If it can break 142, I'd say you might not have a short until it bounces off a moving average. But if it kind of rejects this intraday, might be a decent short. That seasonality is very good. Yeah,
For CVX, huh?
Yeah, 24 trades, 83% win rate with a 2 profit factor.
It's very good.
Yeah,
Very,
so
very high. Very, very high.
and we'll glance over to 10-day hold.
Mm-hmm. And folks, next week we're going to have a getting started class on the new data miner software. Matt is going to, because Matt helped design it and facilitate it, he's going to give it to you. It's not going to be long, but we'll have that next week. I already scheduled it. I already scheduled a date for it. So that's going to happen. That's going to happen beginning of next week. Matter of fact, let me give you the date for that. Let me give you the date and the time for that, actually. The data miner masterclass is going to be next Monday at 1 p.m. So literally exactly seven days from right now, from this time right here. So put that on your calendar. It's going to be a fun class. And anybody who bought data miner before, it's not. And tomorrow's gap to green. And you guys don't have to worry about you don't have to worry about writing things down. Once we get a video of it, we'll put it in the members area for you. Also, remember gap to green? I promised 20 trades a year. Well, I've already issued my second one today, so I'm going all the way on that program. I love gaps. All right, Matt, do you have anything else before we conclude today?
Nope, I'm done.
Do we have any questions from anybody? Reasonable questions that I can answer? No? Okay. All right. You guys have a great afternoon today. Stay out of trouble. And if you have any questions, you guys know my email address. Okay? I'll talk to you guys soon. Have a great afternoon. Bye, everybody.
Yes, it is, Judy. That's it. Bye, everyone.
You can email me anything you need, RY. Meaning of life. Oh, yeah, that's my specialty. Bye, guys. Meaning of life.